Hello everyone, can you hear me? Hello, can anybody hear? Are we live for everyone? You can tell me by chatting on the podium, on the portal. Is it audible? Hello. Okay, great. So thanks a lot, guys, for joining in for this session. And this session is probably going to be how do you start to pitch, or probably how do you actually do fundraising, and we all understand what is the startup, what is the startup culture, and primarily what we are talking about in the startup program. So I'll quickly go to the point. Okay, you can't hear me. Is it now audible? Hello. Is it audible now? Hello. Is it audible? Okay. So if it doesn't go audible again, just let me know. We'll switch on to some alternate means for having a mic or something. So taking the first point on, I'll give a 2 minute brief on how this session is going to be like and what we are going to talk about so that we can process the whole data. And to start with, I'll tell you that we'll share the presentation also along with the post the session ends so that you all will have carry points. So you can just take notes or questions. And I'll also at the end of the session give you my email ID so that if there is any questions further, you can always write those queries. So we'll be first starting with who we are as venture capitalists for a minute or two, and then we'll take it forward to what is this startup culture all about, and then we'll talk about what are the various aspects of how you should go about raising your capital or your funding, and how should you target and whom should you target. And we'll end with that. And if there are other further queries, we'll can again take it up in the next course of it. Okay, to start with, Venture Catalyst is an organization started in 2016 January by a couple of friends there in Mumbai, and we had the aim of presenting a new kind of a startup funding wherein people will be able to not just get fund but also get incubated, supported in terms of taking their organization to the next level. Wherein, of course, the investors that what we are looking at is looking to increase their profitability. At the same time, the organizations are also looking at not just getting money, but also are looking at getting new business aspects and new business markets. So as of today, Venture Catalyst is almost 600 crore rupees invested in the last 33 months, 34 months, and we have done investments in 65 startups, and we have now a market cap of around 4,000 plus crores. Few of the successful startups that you might collate with are Lenscard.com, Oyo Rooms. We were the primary investors at Oyo Rooms before we started Venture Catalyst in individual capacities when it was Oracle since 2012. And then latest one being IGP.com, then Mesa Technology, then Kiros, and more so Clear Deco and Lenscard are both on the same genre that we have funded. And the latest one being Orbi AI. That's a AI solution for certain manufacturing industry. So that's where we are. Now taking quickly to the session so that we can start with. We'll be formulating the session in next 30-35 minutes. And if you have any queries at any slide, please do type in at the same time. If you will not be able to take up those queries now, we'll certainly look at sending you an email answer to that. So starting with what is the whole idea of taking funding or how to get pitch. You need to establish the readiness of certain aspects, and these bullet point aspects are preparing an organogram of the organization so that the investors understand the frame wire of your organization and they understand basically how this company is structured. Putting in the top management profiles, presentation decks, There are multiple levels like an elevator pitch or a proper business plan pitch or a complete financial pitch. In this case, an elevator pitch is somewhere around 7 to 10 slides and not more, whereas the other slides should never be more than 25, which includes your thank you and your exiting slides. Then you should talk about the valuation sort. You should talk about a business plan and a summary, and then you should talk about the financial data of the company, so the balance sheet and the profit and loss statements, risk evaluation and mitigation plans, proposed deployment of the funds, and projected ROI with exit options. That's a must. You have an exit option so that your probabilistic prospective investors understand what they are getting into and how they can see a profitability. And of course, an NDA for the VCs. So, first thing first, you should get a chartered accountant and a company secretary who can help you structure your basic financial valuation and paperwork, and get a legal advisor so that you can get a proper NDA in place. That whatever your ideas are, they are safeguarded, and that is a must. So, it should not be at any point of time a challenge in a later course if you don't get funded by that company. Now, the presentation desk. The presentation deck should actually cover the basic company history and the evolution to date, where, what, when happened, and the brief sales and marketing plan. It should have a current financial data and projections. It should have a business plan, and it should have a risk and mitigation strategy. It should have the proposed deployment of funds. It should have an ROI and exit option for investors, and it should have a country case studies. For example, US, Europe, some places. If you don't have a similar study in India, if you have a similar study in India, it's always good to use that also in your examples to state the point of a market availability. And this also helps you in demonstrating the evolution of the business in the country or globally, as per your case might be. Hi, a lot of people are joining in. So, hi, Deepan, Prabhat, Rohit, Zeva. We should soon catch up with. And Ayush, I'm sure you are now getting to hear this volume better. And now going to the next idea of what should be actually the concept of making this pitch. The core idea and the perceptibility in market should be actually spoken out. It should be presented in your pitch deck. It should be there in your presentation, and make sure, of course, you are appropriately dressed, which does not mean that you need to get out your jeans and a big coming out on a suit, but it depends on totally in your business sense. If it requires you to be in a business suit, it should be. Whereas we investors would love to see people well dressed, which shows their commitment to the whole presentation and the importance that they give it to that occasion. And it is always preferred to have a proper suited person presenting the whole case, maybe male or female, with appropriate ties and dresses. And of course, always carry a hard copy, multiple copies of your presentation and supporting documents, so that if you don't have that, presentation doesn't go in, you don't have that pitch not happening on your computer, or some projection is not connecting to, you still be able to actually present just by your presentation hard copies. And for supporting documents, you should carry your organogram, your financial data sheets, your balance sheets, your P&L, your projected market sales funnel, and of course, you should and you must carry a product if you have a product company. And if you have a solution company, you should carry the software or some presentation in the hard sense of whatever topics you have. It is also good if you can carry a standee if it's possible to, so that it makes it more professional in pitching your program while talking to the investors. So, the core idea and receptibility, coming back to that, the things that are important not to be missed are the value proposition that your organization, your startup is looking at, the disruptiveness of that idea that you have with you, the current market dynamics, and of course, the gaps and issues that you are doing in the fulfillment of this process of your startup, and what changes will your startup bring to the market. It is very important to showcase your innovativeness or your disruptiveness to the investors so that they have the guarantee that whatever you are proposing or getting funded is, of course, going to be skewed for some time before other competitions enter in the market. Now, going to the next part, the market landscape, the market size and the expected market share that you have, and you'll be looking at targeting to. You will have to go for, of course, the basic steps of understanding, and all these data points need to have source, and source needs to be mentioned. So, example, you are putting in a source from the Economic Survey of 2018 May Government of India. It should mention that as point while making your Tom song of the program. And of course, then you should talk about your customer profile, the current buying behavior patterns, or the kind of targeted audience that you are looking at and their buying behavior patterns if you are not yet a selling startup. The current customer landscape or the projected customer landscape, the current and the future competitiveness in this landscape in India and globally. Always see that your organization is going to be a national organization, at least, if not a global organization. Because having a local startup is a good solution, but it's not a corporation. Startup's future is to have an IPO. To have an IPO, you need to have at least a national level importance in the product or the services or the solutions that you're providing. Else, it will be not a good proposition for a large level investors. Somebody a few some time back asked me that what is an appropriate point of time to seek out probably a angel investor or a VC, which is a better one to have. And to my answer to that statement would be that you should always look at an angel at the start when you're on a pre-seed or seed stage, the first step that you're raising funds. Of course, that's where VCs usually will come in, but they also will help you. The angels will also help you on a personal level in structuring the organization. But having said that, a VC is more appropriate if you have a large scale operation and to start with itself, you need an organization structure support. Whom should you seek funding from? That's a question I've been asked quite often. And the best answer to it is that somebody who can understand your business, help you grow that business, and find new clients to serve those new growth that you have built in your business. And to serve those clients, have money appropriately available so that you can actually target those markets and those clients from that money. That is why you should have actual appropriation of the right people. Okay, so I have a question here from Chandrika. Could you just type in your question? So probably we might answer that. And Deepan has a question: how many types of presentations we make to promote our business? Okay, so Deepan, you don't need to make multiple types. There are categories of presentations. So a pitch deck presentation of an elevator level is something which you do it in less than 3 minutes, and that is more appropriate when you're meeting somebody for the first time, intriguing them to your business idea, and probably enticing them towards understanding and giving you more time to present a better business plan. And probably a proper business plan and a financial presentation should never exceed 23 to 25 slides. You have only 15 to 20 minutes to present. You should emphasize on certain things which should never be skipped, which we'll be talking about while this presentation goes on in what we are discussing. But we need to understand that the presentation is being done to an investor who understands this day in, day out. So they are just seeking those certain sparks. If you get that sparks, people will be loving to understand more. And once they want to understand more, of course, there will be a proper due diligence, which will take not just 15, 20 slides or 100 slides. It will actually be a 2 3 month process wherein the chartered accountant team will come down and do that whole presentation, understanding of your proper business balance sheet and your profit and loss statements. If you have patents, they'll go through the patent office. If you have different IPRs, they'll check through those IPRs, trademarks, and then a due diligence will be completed before the fund is actually released. Okay. If it's a total new idea, that's a question coming from Chandrika. If it's a total new idea for the market and the customer, how will we describe customer buying pattern or behavior? Okay. So, Chandrika, I'm presuming that you have certain things that you are envisaging that will be completely new for the Indian market, or is it globally for the first time? That we need to understand. Taking this as a new for the Indian market, The answer would be that you need to, as I already said, go back to the point where I mentioned, which says that you have to bring in the country case studies from developed countries or other emerging markets where this business has already evolved from. It may be true to just your Indian case for the first time, as we have said now, Indian market. So you should go to those international startups, companies, or organizations from which you are trying to learn and carve out our Indian set of a business structure for a new startup that you're planning. Okay, Prabhat Upadhyay. There is a question that you have how to form the team for a startup. Okay, we'll come down to that in the presentation. But just remember, everybody who's coming for the startup is not just coming for the money, they're also coming for the name, they're also coming in for the uh, respect and at the same time uh, command of people from the market that he and she was able to create that or this in this startup. It might be that there is a new, for example, you in an IT company, and there is a new coding person that you have got, and this person would like to be appreciated for I was able to code this. I was the basic coder of this organization, which did this algorithm, and this algo was designed by me or my team, and I did this and I did that. There needs to be a sense of belongingness, and if you can offer that, you can form a good team. Finding a team, the first thing you should look at is find people who have that talent that your company requires, but you don't have. Of course, you need to pay them well. If you pay them half the salary or if you pay them less the salary, you can always give them a stock option in the company, which can also help. Okay, Ayush has a question. How do we identify the right timing for a certain product? So for that, that's a whole story. That what we all do while we just get into the basics of any Ivy League college or any good college. We keep on studying and reading newspapers. When you read multiple newspapers, multiple news channels, and see the market trends, you will be able to envisage in next 2 years what is going to be the market requirements. That is what you start with. Something which is being required today, I'll tell you that. Medical manufacturing is today the industry's basic core. Next 2 years, 2021, you will see people making good money on it. 2020, people will start hitting a good second level VC funding. People who are getting funded for the first time. By 2022, you'll see those companies doing an IPO or doing mergers with the bigger organizations or getting acquired. 2023, the time will be over. That's how the trends are analyzed. It has to be practiced. It took me 19 years to practice that. So it does take time, but if you want to pick it up, it might be that you can do it. Okay. There is another question. If value of our shares decrease, how do we increase the value? Okay. So your share values does not decrease. It is the business that has decreased, and if the business has actually seen a slump, you need to work on the sales and you need to work on your pipelines rather than looking at the share value because the share value has no real value in terms of money in your account. It really has a notional value. The real money in your account is going to be the reason of what your share value is, and for that, I would always suggest that you build on a proper sales funnel, have more number of sales points so that you are able to generate more revenue on base which we can see a future market for you and we can also see the kind of funnel that you have so that build a better share value for you. Okay, there is another question. If we are deciding to introduce a new product to the market, in the market, what is the best way to decide on the market segment and targeting technique? Okay, this is getting into marketing rather than into how you pitch a startup. So probably you can uh, uh, send this on an email to me. I'll share that. Park this question. This is a marketing question. I'll love to answer that, but not this inappropriate for at this point. Probably another webinar we can talk about. Okay. Aman says, "Sir, we have a defense-based prototype, but we face problem in its validation. So we have want to start our own venture, but we are lagging validation. Kindly share any suggestions." Okay. So that again, Aman, is an offline question because that is not related to how you put your startup. But yes, it is somewhere interconnected. So I'll just tell you this: that before you go on to make a product, you need to identify the key stakeholders required to validate and register your product before you take it out in the market, which in this case would be probably a DRDO. So probably I need to understand more of your product, and probably I can help you with if I can once understand that. I've funded a few companies in that space. Pawan says, what all slides I have to include when I approach an angel investor for the first round of funding? Okay, so Pawan, once this presentation is finished, I'll be sharing the basic structure slides with the I am Lucknow guys, and they'll be sharing it with you. The e-cell will mail you after the session. So you'll have a proper array of slides and the flow that you need to require that you can follow. There is a full business plan idea, but as I earlier said, 7 to 10 slides which explains who you are, what do you do, how do you do it, where do you do it, and who are your clients, and what is the validation your company has, this product has, and all the service has, and what is the money that you are seeking for, and how much, and what time, what are your target milestones, and what will be your deployment of funds. That's all is required. Ayush, I'll be giving my email ID at the end of the session. Okay, what does an investor has in mind? That the product has to be sustainable with environment, or just you like to see that? I didn't get your question, Samaksh. You'll have to probably type in again. Probably expanding this. I could understand. Okay, Deepan has another question. What problem do I look to solve? What niches have not been served? What gaps in the industry, in the market? Okay, what target market? Okay, okay. So Deepan, this is something for you to find out for your own self. I can't guide you in finding which are the gaps that are required. Otherwise, the whole indigenous idea of finding an innovative idea for your own self is sort of so nobody can tell you that. Just you to find out over the journey. Okay. Once you have found it out, and you have something in mind, you can just drop in me an email, or probably I can help you structure. Okay, coming back to the slides, something in the market landscape we should not miss is the revenue comparison of you and your competitors. It's a must. A lot of startups do that mistake. They think that I'm just starting off. I should not talk about that. I'm just doing 2 lakh rupees annually. I've not sold much, but okay, Chandrika, can you hear me now? Is it audible now? Hello, is it audible, guys? Okay, so uh, comparison sheet, what we're talking about. So revenue comparison. Somebody asked the question, Chandrika, I suppose you asked that question that you are launching something new in the Indian market, but is globally available. So you must talk about that. It helps in understanding an investor's point of view that this idea already sells and has a good market. If, for example, you have some product which is sold globally for only $100 million, that's not a market to talk about. But at the same time, if you have a product which is being sold globally for, say, example, a $20 billion market, then and there are 3 players in it, you still are the fourth player. So there is a good chance of sharing even the 10% of that 20 billion. You are still talking a 2 billion market just for you. So that is a business appropriate to be entered into as an investor's side. Okay, coming back to the clients and the business. The current clients with committed revenue potential, your funnel, sales funnel, is a must that has to go in. And this is the part that you should put into your pitch, because I need to understand from an investor's prospect what am I getting into, and is there a business future in this. It's best to have your order book shared also, which also makes it more appropriate in terms of adding to the real business that you'll be closing this year. And of course, clients in the radar that you have, the probability of the expected revenue, and of course, clients with the competition is very, very important, because I'm pretty sure whenever we are putting in any product or anything in the market where there is already a competition, we are trying to build in a better service offering or a business offering or a product offering as compared vis-a-vis to the competition. So it's good to mention the client names of the competition, which can be your probabilistic guaranteed clients. Okay, Deepan, you could type in those questions and email it to me, and I'll be surely answering you on the mail. So don't worry with that. If you're not able to hear what I said, we'll surely make out something for it so that we can have some. And Okay, so Samaksh, you have seen some pitches, good, and you have the investors ask question: how do you relate it with the sustainability of the environment, or would it cause some? Okay, okay. So I don't know what business you are in, Samaksh, but probably if your business actually has a threat to the environment, that would be the questions are probably being asked by other investors. So probably I'll need to understand more of your business before I can answer this, but surely we can take it offline and I can help you. Okay, coming back to the clients and business, we need to also talk about the likeliness of the longevity of the current running contracts that you have with your clients. That also helps in understanding the kind of revenue that we are building in this business while getting to invest in this. What are the exit barriers for the exiting clients? Existing clients is also something to be surely mentioned for, so that I know what are your opportunity threats, uh, strength and weakness, of course. That SWOT analysis is there, but at the same time, I'm also able to understand what stops or what hinders a client from moving out, or are there barriers that you have created? And if they are not so appropriate barriers and the clients have got into it, of course, our investor would certainly suggest to make them better, so that the next time a client is actually adding up, which of course the investors will also, the right investors will also help you in adding to. They will not put in the same kind of clauses again. And if you have the first movers advantage, what are those, and what are your market educating efforts that you're putting in, which also is a good idea to put in. Concept selling to a running business selling is, of course, always difficult, but from the investor's point of view, there is always a 10 to 15% more likelihood of success when it comes to having a new time, first time concept selling business. So it's good that if you have that, and if you don't have it, you still can talk in the same sense that I am a $20 billion business in India or globally, and there are only 20 players in the world, and in India there are only three. I'm the fourth one, so I have this much surety of the business, and that's where my guaranteed market size is. Okay, coming back to the business model and pricing that you need to mention about the current pricing models that you have in place, the current and the future revenue streams that you're having or proposing to having in the system, and the advantage of the first mover that we discussed. The business growth and the profitability projections needed to be added into the presentation of the last 2 year business. And if you don't have that, don't need to worry. You can put in your competition's last 2 years trends, that this is how the industry is moving, so that you can talk about your business escalations industry trend wise also. And of course, you need to talk about at least 3 years of your growth projections, and profitability projections needs to be mentioned. How your profitability index is going to rise over time needs to be talked about, and ROI projections need to be mentioned. The sales and marketing, of course, needs to be added, and the sales teams and the geographical presentation needs to be mentioned. The sales infrastructure need to be mentioned. The gestation period of sales need to be talked about in the sales aspect. The marketing aspect, you need to talk about the brand building efforts and the PR efforts that we are putting in the industry bodies, so that what is going to be your efforts for go to market and for the new products as well as for the existing ones. Okay, we have another question from Bhupendra Singh. A business is different by operation model from existing businesses. How do I present to investors for better understanding? Okay, so Bhupendra, I understand almost every single startup, as per the definition of a startup itself, is an innovative and a disruptive idea, so it just falls in the same category as your business is in. But having said that, the only benefit that you should talk about is that this is how the industry is moving, and this is what their learning curve is, and this is where my business learning curve is, because I am different from them. Henceforth, what will be my differentiator in terms of revenue generation, in terms of future business expansion, and in terms of future business ROI vis-a-vis to what they are retaining for. That will help an investor understand quickly that this is what the others are doing, and this is how better or how different you're doing from them, which will make you more profitable or quickly profitable and sustainable as compared to the existing ones. Ankush has a question. Do we need to put in some research data related to our product while pitching? Mhm. And if yes, how much data should be considered sufficient? Okay, that's a nice question. There is nothing called a sufficient data. You can keep on putting questions and as much of data, and people who are trying to understand will ask. But if you are going to put in some data which is going to be research and related to your product, only talk about that much which gives your product a leverage over the competition existing or the future of ROI. Don't talk anything else. It's irrelevant. Just do that much of support. Okay, Ashish has a question. I have my own startup where we target different schools and then let them find students and vice versa. But I face trust issues. The schools or the students don't trust us as we are new. How do we overcome that? So that is more of a business mentoring question, nothing to do with the pitch. So probably Ashish, if you can write that question separately to me, I would love to answer your query. And there is a solution. I had funded a company some time back, which was into quizzing, and we are now Asia's second biggest company in quizzing. And Charu Sharma, the cricket commentator, the RCB CEO, is our quiz master, and we are doing almost 3 million students every year in 9 states. So that's a similar thing which I faced in 2012 while we were starting this company. I'll tell you, and I can share you practical examples on how we did that and how we are today at a place where we are looking at probably talking to the big VCs with raising a few $3 to $5 million. We've already done the first $1 million raise with a big company. Okay, another question. Suppose our startup do not generate profits during few months, then what will be the duration we should wait or we should close it? Prabhat. So Prabhat, there is a very quick answer to this. Very, very quick answer to this. You should learn to fail fast. If you think that this business is not appropriately going to give profits and this is taking more gestation period, vis-a-vis to the ROI that will get you in the first year will be a negative, but in the second year you have positives, you should continue. But if you see that this is going down and there has no business profitability, and by the time you'll be able to reach that business profitability, the market requirements will go down for this nature of a business, the genre of a business, then you should close. So point A, if there is a 2 year gestation period before you make profits and you just have a 1 year market left, then you should close. But if you have a market still available for 3 years and your business becomes profitable in 2 years, you must continue because by the third year you will actually be one of the front runners of the business. Okay, Ayush has a question. What does an investor want from a founder? So that's a nice question. I think so. Ayush has given a few presentations. And he's really gone on top of it. He's not able to understand what whole of these guys want. Okay, so on the lighter side of it, every investor is just looking at one thing, Ayush. They're looking that you are serious for this business and you need business. That's it. We're not considering that this business will run or not because we will anyway see that what is the profitability index of this business, what is that you have sold till now, and where is this business heading to, and is the industrial demands meeting what you're saying? If not, then of course nobody's looking at investing. Meet Patel. Receiving funds is a major step for a startup to grow gradually. Are there many specific tactics to improve the startup pitch which might attract to investors to increase? Okay, so this is the whole presentation all about Meet. If you'll just stick around for some time, you'll actually see what is exactly going to be unfolded in the next 15 minutes with the left time. We are exactly talking what you are asking for. This whole webinar is on that. And we all need to remember just one golden rule. The target of a startup is to make a successful IPO, not raise first funds. That is a wrong way of looking at making a startup. Majority of the startups, some 70% to 90% of the startups these days, which I have meeting for the last 2 3 years, over the time have increased in percentage. Say that I will need to raise funds, I need to raise funds, and once they have raised funds, they understand they have achieved success. Whereas the fact is, the success is far fetched, far away. We need only and only now is to work on what we started off with. Because getting the funding is the only point of acceptance that others also envision the same as we do while bringing up this startup into existence. There's something which you must talk about in your presentation in the business pitch deck. is the shareholding pattern. Majority of the startups, while talking about it, do talk about these are the co-founders, these are the advisors, these are the pre-committed money, these are the investors, but they do not talk about the ratio of percentage of shareholding. You should talk about the current holding, shareholding patterns. You should talk about their roles in the system, and you should talk about the exit of the shareholders if there are any. For example, today you have a company wherein your father has put in some money and he also owns 10% of the stock. So you should talk about that. Once I'm getting invested, this 10% of the stock is what I'm diluting. My father will take an exit. The business will get the money. He will gain this. That this can be money. That this can be still some stock options. That this can be also exiting in terms of helping you business. And of course, the reasons of that exit has to be very explicitly mentioned. We should not mix up while explaining why existing shareholder is exiting. There has been a classic case which happened to me some time back. There was a startup raising 100 crore rupees, and their first thing asked me was that there is an investor which has invested 40 crores in this business, and he would like to take an exit. So I asked how much is he looking at doing a drag along process and a drag along process. Is there something of an appropriate value? To my surprise, they said he wants to exit 10%. We want to buy him out. Of course, they can. But they can do that with his own money, with their own money, not with my money, the investors' money. So the deal was crashed. It's an excellent idea. It had a very great response when it was there in this year in CES in Barcelona. Today, the company is still struggling actually to see the face of sales. But that's what you should also not do. That's a very classic example of a company being offered by FBI $100 million contract, but don't have money to actually start building a product because what they are seeking from an investor is not business investment. They're asking exit investments. Nobody will. Valuation indicators, of course, needs to be sought of, and the investments need to be made accordingly on them. The assets that have been generated, the goodwill that have been generated, external benchmarks, if there are any, the IPRs, the patents, they all need to be mentioned. These are value indicators. And of course, while talking about IPR and patents of the assets, the legal ownership, the terms, the inventors who are there. If they're not the co-founders of the company, they need to mention that this is the company's property. Those paperwork has to be done by an IP attorney, and the exclusivity of the IPR ownership has to be done. Geographical boundaries of that IPR needs to be defined and told, as well as the business continuity plan and a data recovery plan for this IPR has to be mentioned. Sources of funding, if have been done for you till date, if any, should also be mentioned. If it is a personal or organization asset that has been leveraged, or is there is a shareholding exit triggered off to that need for that funds, that should be mentioned also. And if it's a friends and family round that was done, it's good to mention that too. Somebody asked me some time back, and this was very relevant while this question came in, that, sir, though I'm asking for some funds, it was my elder brother which had put in 10 lakh rupees when we started. Is it good to mention that, or should I say it was my own 10 lakh rupees to mention and not put in his name? Because he's nowhere related to my IT fintech idea. He is into selling of paints. So he's just a shopkeeper. Here's the question. Are you getting an investor on board, or it was your brother helping you getting invested? Either of the ways, you got money from somebody who's not you, which means that somebody trusts you with that money. It is a good thing to know that from an investor's point of view, that your own brother, your own father, mother, near your family, friends, or friends trust in your idea so much that they're ready to put in their hard-earned money onto that concept or idea. Always mention that. It's a very good add-on there. Because over the gestation period, it has been statistically seen the average time by a VC is 14 hours, by angel is around 6 to 8 hours before the actual money is funded. So in this small a time, to know a person, understand a person, is very difficult. It really helps to see if their friends and family who know them for a lifetime are also investing the same concept or idea. It does help in understanding their skin in the game. Okay, we have another question. The real question is whom to pitch your startup. VC funds uh, VCs fund the already funded, hardly any angel investors. Middle class won't invest in startups. Pawan, middle class can invest in startups, but as per the angel tax appropriation and the taxes clauses in this country, the rule says this is retrospective of the clause was made on 23rd May 2018, retrospective, effective from April, I suppose, 4th. So it says that if a investor has a 25 lakh rupees of ITR for continuously 3 years, or point two has a net asset value of 2 crore rupees. Only he or she can be an angel investor in a company. Else, otherwise, whosoever invests will make your funding in the bracket of angel tax. 30% tax will be levied. Also, say example, you have 20 angel investors investing in you. 19 of them were of that category 1 and 2, either of that, and only one was not in that category. Still, all 20 will be levied on the angel tax. So you need to be also very cautious in getting. Coming back to not many angel investors, Pawan, I can surely give you this guarantee. There are more than 200 proper running angel networks in India, which can talk about it and can help you in finding the funding. You can always go ahead, go to their websites, send their emails. I'll also share at the end of this presentation my company mail ID, wherein you can also, all of you who have their startup ideas, can send their pitch decks. Also, the mail ID that I'll be sharing, you can share your phone numbers. There are certain active WhatsApp groups for startups that we keep on engaging on a regular basis at Venture Catalyst. We will also love to add you onto that. And all the activities that we do with the startups, not just in UP but across India. We'll make a surety that all of you are invited to those programs. If you have the time or the resources available to attend those programs, you can be part of them. Majority of them are for free. Few of them, of course, cost travel and movement costs, but that is something you can invest on your own business. Okay, coming back to the point of extent of funds required and their use is a must while you are putting in the presentation. The reasons, the desired amount, the minimum required, of course, and the trenches in which funding can be received. The milestones have to be created by you, and that, of course, is debatable. A lot of people say that, but it is always good that a startup understands that these are the milestones that I have, and this is the kind of level that I'll be reaching so that I can raise funds. And once my step one is done, I need this much money. Step two is done, I need this much money, so that I can talk about where am I heading to and how much am I heading for. And of course, the milestones are very much important. And then funding deployment structure with timeline is also very, very important. And then a backup plan if a funding is not received is a very must. You always need to remember this, that if I get funding, I'll go at a speed of 100. But if I don't get funding, I still can go at a speed of 20, 30, 40, and keep on working towards that goal. And in between, find somebody else, probably in a near future or later future, who can then be an investor. If this doesn't work, doesn't matter. We still have a backup plan available. Okay, Shubham has a question. Good evening, Shubham. Can I get investment on the basis of an idea only if it is possible for me to execute my idea without investment? So I don't know idea, but then I can pretty tell you this: any idea at any level, at any situation, you need some money to execute it out of a drawing board into a ground reality. So yes, you need some. And can you get investment basis of an idea? A 5 lakh rupee, if you that's what you call an idea and an investment to it, probably some incubations can help you with. There are a number of incubations available in India that can help you. There are more than 250 incubations that can help you with that. But anything appropriate from an angel point of view, from a VC point of view, you need to have something on MVP before you go for it. A minimum viable proposition wherein you can get real money coming in. Okay, Samaksh has another question. Do we also pitch in for funds with the need of for contingency? Mhm. You don't say contingency because otherwise it looks more like that you're not planning your own business well. But yes, you can put in a fund for 5% maybe for a miscellaneous up or down market fluctuations. That can always be helpful. Not a bad thing. Funding deployment with structures and timelines is important. Backup plan is very important. And of course, coming to the last few parts of the presentation, uh, first thing you should mention, first thing you should mention while closing the pitch presentation is what is going to be the shareholding pattern post investment. What is that you're proposing? And of course, the maximum equity that you can dilute. Exit options for the current and the future shareholders. If you have already angel investors on board, then correct ones. If you are going for the first time, then of course for the future ones. Having said that, last point that I'd like to mention in the whole pitch presentation is that we need to make sure the investors see a future of the business sustainability in terms of market requirements. Not that you are being very innovative and disruptive, so it will actually stay. That's not the reason. Best example, when we did OYO rooms, this was something very quickly that happened with us. Ritesh came down to us in 2012, somewhere around Feb, with an idea. We actually turned him down for 2 months, asked him to come with some actual practical returns. And we did get some from him, 30 odd, before ORA will be funded. ORA didn't work, which is okay. We then further incubated him, helped him go down to Peter Thiel Foundation for getting investments and funding. He went to the Peter Thiel Foundation's 20 under 20 program, came back, did some programs. We again pushed him to our very important program in the Richard Branson's Island for a month. He came back, did 100 hotels, and we restructured the business, helped him do that. And that's what we did at Venture Catalyst Incubator. That's what we do, and we are now officially ranked India's and Asia's number one as the size of the incubator. We are in 10 cities, 11 now, and we have around 12,000 seats and some 5,400 startups working with us. And as well as an angel investment and a, incubator level that we are doing as the early stage investors, as per the times now and economic times and the VC circle. We were India's number one in 2017, and in 2018 we have got the interim reports. We are already India's number one again, and we have now ranked the fourth in Asia as early stage investors with 64 investments and almost 600 plus crore investments, with almost 4,100 crores nearly of our investment size. So we exited out of OYO, we exited out of Lenskart. If we could have included all of that, we would have gone more than that of an appropriation as a value. Okay, so we have another question. Sir, can you name some incubators for investments on the good idea basis? So I mentioned you, venture capitalists can be love to look at your ideas that can help with. There are a lot of incubators at IIM Lucknow. We have a sci-fi center at IIM Lucknow, which can help you that way. At the same time, there is a incubator at Noida, which also can help you with. If it's a fintech idea, the sci-fi center there at IIM Lucknow can help you with in the campus, or the Noida campus incubator can also help you with. All the IITs and IIMs have that. And apart from that, there are certain private incubators. You can always go ahead and Google that and figure out the ones which are near to your location. And Samaksh has another question. Sir, please also enlighten on the point that if the idea is not that innovative but will yield for sure, how do we pitch that? Okay, excellent question. So, Samaksh, we are in a business of making profits, right? So, why would anybody need to look at a very innovative idea? Point is, if you are innovative, there is a chance of that not getting copied by somebody else so quickly that your business idea has a sustainability for a long time. And that is why an innovative idea is looked for. Apart from that, no investor is looking at innovative and a disruptive, and that is why they are investing. We are investing in a startup based on the idea that whatever we are investing in has a future as a business and can give profits for a long time. Otherwise, how will I see the next level of investors coming in, and how will I see my level of exiting from the startup at the next level? Okay, so I'll just take the second last question, uh, which is Ankush. Another question: how should we decide on what proportion of investment should be from outside, and how much should we raise on our own? And do angel investors ask for some control on operation activities while investing? Usually, angel investors are the one which are individuals, so they will, of course, poke their nose. ask you things, tell you this to do, that not to do. But in a VC firm, they will give you an observer for sure, and that is going to be a part of your management board, which will oversee all the activities the board is doing, and of course guide the board in doing the right things to see the investment go. And the angel control seeking, that is an individual's challenge. Some investors, like me, we really don't ask questions too much till the time the profitability is there. If it is not going as per the milestones decided, then of course we look at the books, look at the company founders, look at the founders' challenges, or if there is a co-founders conflict, and try to figure out what should be done. Else, otherwise, we don't really have time to get into controlling each company. Otherwise, it becomes very difficult to see our own businesses. And what proportion of investments? As simple as that. Whatever you have the maximum, push, you should actually go ahead with your own business. You should put in the maximum money that you can put in with your own idea and take it as further as possible to get the MVP, the minimum value proposition, at your own level. It makes it more viable so that whenever you are seeking a fund from the investors, this will be the right point wherein you would be giving out the least equity for gaining the maximum of the funding. Else, otherwise, if you'll take too early of a funding, you'll be shedding out 20-30% for a very minimal value. That's not a good way to do it. Okay, so the last question itself is the question Shubham has asked, which I was going to type in anyways. Should we mail our idea to some investors? If he asks, yeah, why not? Otherwise, how will he actually understand what you're talking about? But ideas, no. You should mail your pitch decks. You should talk about the concepts in some sense, in the business sense, but you don't need to be descriptive about I will do this, I'll do this way, and this is what my science and behind the technology is. None of them are concerned. Any good angel investor at a given point of time, let's take an example. I would be invested in some 10 companies at one point of time. Why will I have a time to understand the 11th company and try to copy that into my business model? If I can easily fund that company and still make a profitability out of it. The idea of stealing the idea is to make a profit in a business, right? So if it's already available on the block and I can already buy it, why will I actually go ahead and steal that idea rather than actually will buy that idea? He's already selling that idea. The investor is there. The founders are there to sell that idea. That means invest, sell their equity. So nobody is actually looking at stealing your idea. But if you think that is your idea so uh, sacred, you should always send in the pitch deck. And if further asked, then you should send in the NDAs with a proper indemnity clause, and then go ahead and share once you have that on a stamp paper. Don't do it on a piece of paper. Do it on a stamp paper. Then probably you can have that. Okay, guys. Thanks a lot for a quick session that we had today. It was quite engaging and intriguing to talk to all of you. And thanks a lot for all of the people who have been asking questions. They made it quite interesting for others as well as for me. This is my email ID for the company. You all can share your pitch decks. At the same time, all the people who are viewing this webinar can ask questions at any point of time in this mail ID, and we would love to answer them in 1 or 2 days' time. Give us the appropriation of around 100 to 200 startups are on a week asking questions. At the same time, if you would like to be a part of the venture catalyst efforts of this startup WhatsApp group, all you need to do is mention your name, your startup name, and send your mobile number of the WhatsApp, and we'll add you on that. The heading of that email should be, the subject line should be, please add me to WhatsApp, and that will do the trick. I'm also sharing you another mail ID, which is the mail ID which you can send in your queries on. I keep on traveling a lot, so I'm sharing you my EA's mail ID. And if I'm traveling, even then somebody will be appropriately answering those questions, not on my behalf, but the answer that I'll be sending them to. So I'll be personally seeing all those questions and answering it myself. So this mail ID that I'm sending you now is the mail ID which you can send your queries on time to time basis, and also send in your request if you want to be part of the Venture Catalyst WhatsApp group, wherein all the other startups also share their peer learning. And this is my PA's mail ID, which you can reach out to. Okay, so and I think so. Vishal wrote something and he retracted the message. But then, of course, that was a very good question. Vishal, the steps of adding to WhatsApp group are uh, one, um, email to, of course, email to this ID, uh, email to vcats.up at venturecatalysts.in. Just a second, the mail ID is mentioned here. Yeah, that's the right one. So you all can email this subject line, add me to WhatsApp group, and your name, your startup name, and the mobile that you want to add. Okay, thank you guys for having me for a quick session, and would look forward to your questions. See you for now. Bye bye.